ciao. It's a great pleasure to be here. I think for all of us it's a great pleasure to be here, and for me too. So it's a great pleasure. And well, purpose of this talk is kind of share a bit with you the experience, the I would say, quite peculiar experience of Leithà, being Leithà, an Insurtech that has been actually founded by an insurance company, by a large incumbent. So just to give a bit of the perspective, or to put things into perspective, just a couple of words about the Unipol group, that is the insurance group that founded Leithà in the end. So it's an Italian player. It's through its major company, that is Unipol Assicurazioni. It runs both life and P&C business with a strong focus on P&C business. It's actually the largest Italian player in P&C. And on P&C, there's a strong focus on motor, and on motor, there's a strong focus on telematics. I think we are currently around about to have 4 million installed devices on black boxes installed on insured vehicles, which should be the largest insurance-based or telematics insurance program in Europe, and maybe, in the world. So this is where we have born, basically. We were born. Okay. Okay, so let me do just some, setting the scene. Why we are all here, why there's all this, talking about machine learning, artificial intelligence. I think the one and only real event that happened, and thanks to this event, we are all here in this beautiful and unique environment to talk about machine learning and artificial intelligence, is in the end Moore's law, because basically the math for doing machine learning, like classification and regression trees and artificial neural nets, has been there or it's there since maybe the mid-90s. And what happened is actually that the cost of computing power is continuously going down, and now that kind of calculations is just on the one hand side feasible, and on the other hand side cheap and fast. So cost of computing power going down allows now to run the math that is there since the mid-90s, and more or less nothing else has really happened, A new data landscape. Yes, this is something we all know. And again, this is strictly linked to Moore's law, because we are just accustomed to think about data, thinking about structured data like numbers and labels in databases or data warehouses, while we are now all talking about calculations based on text, whatever, text mining, image processing, media files, log files, and data coming from sensors. But in the end, any kind of digital information is just numbers. And as I said, the math for doing calculations on those kind of numbers is there since 50, 60 years. And again, what happened is just that doing calculations now is feasible, cheap, and it's fast. So it's not really a new data landscape. It's just that doing calculations is feasible and fast and cheap. And, allow me a small experiment, because what happens typically when we all talk about this kind of, digital disruption stuff, and at the same time we wear our corporate suit, is that, we kind of get scared of what is going to happen. We think that this kind of stuff is somehow related to the digital natives. Sooner or later they will have purchasing power. Sooner or later they will run a big part of the economy, and we must get ready now doing some experiments to understand what will be going on when those guys or geeks or digital natives will come into play. So if you allow me for this little experiment, I think we have talked, well, we have listened to colleagues or friends talking about smartphones, and smartphones is just maybe not stuff that is just for millennials. So I think that you all have one of these. So if you have one of these, please pick it up. It's just a small experiment. Nothing dangerous is going to happen. Just pick it up, please, and show it to me. Wave your hands. Okay, cool. Please unlock it. So do you all have your smartphone unlocked in your hand? Okay, so I will now just count 1, 2, 3, and at 3 I will ask you to give your unlocked smartphone to a person next to you. You ready? So did you feel a bit upset? Did you kind of feel shivers? Okay, so you don't have to do it, but you are in good company. So smartphone, digital disruption, this kind of stuff, virtual assistants, this is not something that will come into play and that will be something for digital natives. This is stuff that is real right now, and it's about every one of us, today, not tomorrow, maybe even yesterday. So this is stuff that is, yeah, for every one of us, and it's here right now. And in a way, this is also something that is, one of the pain points that we face being, as I said, an Insurtech within an insurance company, because, this kind of cultural gaps, like the one that has just been shown, with this small trick, is what we face basically in our day-to-day activities with our, colleagues within the group. And yeah, I just listed some of them, and one of them is, of course, the definition of data. So when we think about data, we don't think only about numbers, labels, structured data, but we think about any kind of digital information. Any kind of digital information can just be computed, and that's data. But this is, especially when you, for example, think about digital documents. Digital documents, yeah, if you allow me, are typically just a pain in the ass, because you need to, store them and keep them just for regulatory stuff. But as soon as you can get rid of documents, you typically get rid of those documents, because, of course, storing documents is costly. But it's costly on the one hand side, but it's value on the other hand side, because it's numbers and you can do calculations on those numbers. Then, yeah, what comes next is make or buy. Again, what happens typically when you do calculations on your own data is that, especially when you apply whatever kind of tool in the data science toolkit, like whatever, classification regression trees, neural networks, generalized linear models, whatever, what happens typically is that the value of your data is transferred to the calculations that you do. The value of your whatever documents, digitalized documents, is transferred in the weights of the neural net that has been trained to work on those documents, or to automatically work out what happens on the work that has been done on that kind of document. So what I want to say is that typically, if you get closer and closer to features that are of your own core business, what is good to think of, at least, is make stuff on your own. Otherwise, you will put at risk a significant amount of the competitive advantage that can arise from doing calculations on this kind of data. Commercial software versus open source. Again, what we typically think of or hear is that open source is not stable or is not trustable or stuff like that. But yeah, reality is that a lot of big tech run a big part of their own operations on open source software, and open source typically means a worldwide community of developers at your disposal, more or less for free. Of course, you have to take the burden and you have to take the liability of checking that the stuff is okay and continues to work. But yeah, it's not a given that open source is just not trustable software. And then waterfall versus agile. Yeah, I would say that most projects that we as Leithà run, and broadly speaking in the data science space, most projects are, I would say, exposed to a high level of uncertainty. And this means that Agile is not another buzzword, but agile is rather an instrument for mitigating project risk, and on the one hand side. And on the other hand side, it's a tool for generating contact frequency between guys working in data science, computer science, and the business guys, you know, in order to be able to set a common playground and at least a common language. So this is again something that we constantly, you know, basically face in our day-to-day work within a large incumbent. It's just where is my timeline and where is my deliverables and where are my milestones. So it's not just, okay, what do we do in the next 2 weeks, and what have you done in the past 2 weeks? Okay, and then, well, yes, this science fiction prejudice. We can rephrase it as, you know, managing expectations, because yes, on the one hand side, artificial intelligence is not a robot sooner or later, you know, running the world. On the other hand side, is not even, you know, something that should all of a sudden, you know, solve all your questions or your problems. It's just, you know, a huge history of recorded events and the possibility of doing calculations on that kind of events. Okay, so I will just, you know, briefly mention what the message that I want to convey through this slide, and this is basically something we all know. What is nice of doing data science within the insurance industry with respect to other sectors is that in insurance, data is, or should be, to the utmost extent, included directly in the products themselves, in the pricing itself. And this is why we are also heavily working with the pricing colleagues and with the actuaries to enhance and improve their capabilities of, you know, discriminating risk, because in the end, more data should mean a more sustainable risk pool, and a more sustainable risk pool should mean, a more profitable and more stable balance sheet for an insurance company. On the other hand side, I don't believe that data is the most valuable asset of an insurance company, against my own interests. But I think that trust is the most valuable asset of an insurance company, because in the end, when you purchase something from an insurer, what you buy is the fact that you believe that if something happens, then your insurance company will be there. So this means that when we work on data, our focus on privacy, and is to the utmost extent again. So here again, some methods and technologies help us in delivering hopefully nice solutions without, you know, or fully taking care of the privacy of the clients. So then if we come closer and closer to what we are, we basically act as an internal service provider in the data science, computer science field, and our aim is developing this kind of solutions. So we are not talking about an innovation lab. We are not talking about guys doing POCs, but we are talking about a factory that develops solutions, applications, or components of applications with this kind of, you know, features. So data consumption, data-intensive solutions, this kind of way of doing stuff that is called nowadays agile. And aim is, preserve, extract value from and enrich the data assets of the group on the one hand side, and on the other hand side, but I mentioned it already, gain and maintain competitive advantage. That means that we are doing stuff. We are not working that much with, you know, third-party vendors. This slide here is a big bunch of buzzwords, but there are, I would say, 3 messages that I want to convey through this slide. On the one hand side, this means that we have chosen kind of, you know, not to be vertical on one single, you know, field of this vast landscape of the data science, computer science landscape itself. But rather, we wanted to try to maximize the amount of questions that we could try to address through the entire toolkit. On the other hand side, or the second message I want to convey is that there is this kind of data science myth of mathematicians or guys like this, just writing formulas on papers. But data science, in the end, is, again, algorithms running on a machine. So you just need to have, yes, guys who know the math and guys who know how to program a machine at an enterprise level. And have your models, your pipelines running at an enterprise level 24/7. So this is why we have both data science, and it's called computer science, but it should be called IT. So this is why we have both functions within the company. And third message I want to convey is that in the end, all the guys working for this company are developers. So we do not have innovation experts. We do not have, maybe we lack innovation managers, I don't know, or experts. We do not have project managers. We are all developers. And believe me if I say that sooner or later, maybe it will happen that all of a sudden, we all realize that what, fintech, Insurtech, regtech, big tech have in common, there is one and only one thing that this kind of stuff has, or these areas have in common, and it's the tiny little suffix tech. And this is why, our strong focus is actually on tech, and on tech guys, and on developers, that we strongly respect, of course. Okay, so we are actually basically working on the entire value chain. I was kind of trying to commit myself not to say value chain, but yes, I said it. So we are working on the entire insurance value chain, but I would just use these bullets basically just to mention again some of the potential showstoppers or cultural gaps or hurdles, obstacles that we kind of face in the various areas that we work with. So we work on premiums. Talking about premiums, I will talk about regulation, because yes, we did some premium calculations, some frequency severity using gradient boosting, but either the performance in terms of whatever KPI that you might think of, Gini index or whatever, either the performance is really skyrocketing with respect to generalized linear models, or you'd better stay with generalized linear models, because especially in motor, a compulsory product, you need to certify the way you do your pricing. And I don't want to be the guy who explains to the regulators that we do pricing with gradient boosted. So if gradient boosted has skyrocketing performance, then we go for gradient boosted machines. Otherwise, we stay with GLM, and we are okay with supporting our colleagues with data enrichment, with just calculating new indicators and using the new indicators in the GLM. Purchase propensity algorithms. Of course, yes, this is stuff that we work on. So estimating who will be purchasing what. In this case, I would say that the major hurdle that we face is that we think, and in some sense this is also true, that insurance is a data-rich environment. On the other hand side, the contact frequency with the clients, it has been mentioned already by other friends, is not that high, and from time to time it's also on purpose, because typically if you see your client when it's time to renew the policy, it's good, but if you see your client one more time, then it might be the time that you have to pay, you as an insurer. So purchase propensity algorithms are okay and typically perform better than just randomly picking up parts of the customer base. But yeah, major hurdle here is contact frequency, which means lack of data. Claims management and fraud analytics. I would focus maybe a bit more on fraud, but for claims, for genuine claims, it's more or less the same. Here I would say that the claim is explain, because what we are typically told when working with claims handlers or fraud handlers is that they cannot just stop a claims settlement because a crazy black box like a neural net tells that the probability that that claim is a fraud is high. So in this case, we had to develop some stuff or to sacrifice some points of predictive performance to explainability of the models, like using trees instead of neural nets, because typically when you use a tree, then you have a toolkit that enables you to explain what the hell is going on, like variable importance or stuff like that. So something that you can give in the hands of the claims handlers or the fraud handlers just to justify why the model is suggesting that that claim has not to be paid. Telematics, claims, and trips, yes, there's a strong focus on both claims and trips based on telematics data. Yeah, I will just take trips for sharing with you another potential obstacle. That is that most of the times, actually, we work on data sets that were collected for different purposes. And trips, for example, have been collected basically based on the current way of doing the renewal pricing on telematics policies. This means that we do not have that many real-time data. We do not have that many, or as many GPS fixes as we would like to, but still you can do stuff, some stuff based on the data that has been collected for, maybe a different purpose. NatCat modeling for insurance reinsurance. This means that we are kind of this is, I would say, the most research-like topic that we are working on. We are kind of trying to investigate what is in the tiny overlap that we start to see between machine learning and NatCat events. But this is, I would say, more research. And as a potential issue, I would mention the good or right balance between pure or research stuff and applied stuff that already that will potentially generate some benefits. And then process automation. Well, process automation is also nice because what typically happens is that you do the stuff and your business partner maybe doesn't trust at the beginning that something useful will come out of your project. And then when something useful comes out of your project, and all of a sudden your business owner realizes that 50% of his workforce is not needed anymore, and all of a sudden he or she realizes that this means that 50% of her or his people, or his power is going to vanish due to your crazy machine, then some friction may show up. Okay, so I would just maybe conclude 5 minutes in advance, and just to summarize and to again close with a kind of a provocative statement. I just already mentioned that we are not an innovation lab. We are not doing POCs. We are not doing analysis on static data sets. We are not even doing working prototypes. This is just maybe part of our own working mode. But what we want to do is starve to death to go live with stuff, because in the end, trying to close cultural gaps is nice, but this will remain highly technical stuff, and yeah, it's not so easy to be explained, even if you're good at explaining. But all large incumbents have one lingua franca, that is language spoken from everybody, and it's money. And I don't know any kind of different way of letting data science speak the language of money other than going live and go to the productive environment of the company itself. So that would be it. Thanks for the attention.